Probability of AUD JPY going down right now fundamentally is 0 point something percent. Market took out these highs 1, 2, and 3. The market went up into this psychological level, and the government was like, fuck that plan, that's a shit plan, and therefore the prime minister as a result resigned. If an MCS happens, then you close your trade or you pivot accordingly. Hello everyone, hope you're well, hope you're doing alright. It's been a while since I recorded a live trading video, so here we are. Today is Tuesday, 9 September. I'm looking at AUD JPY, I'm looking at EuroCAD, I'm looking at Euro GBP, and I am looking at AUD NZD. We're going to be discussing all of these different trades and whether I'm going to take any of them, or what trades am I going to take, what trades am I going to avoid, and the reasoning behind them, so you guys learn the most from this video. Now, first of all, let's quickly discuss the setup that I am looking for, just to summarize my setup and also remind you guys of it. Now, what I usually look for is I look for the market to expand in a certain direction, and then I wait for signs of reversal in the opposite direction, and I try to trade the markets in the opposite direction. So basically, I am a reversal trader. Now, the signs of reversal that I look for include technicals, so finding some technicals price action patterns for me to go ahead and enter. That's number one. Number two, fundamentals. So I analyze the macroeconomic and microeconomic perspective in order to see if the fundamentals support my theory, and if they do, I go ahead and I enter, and if they don't, I avoid the trade. Number three, it's algorithmic. I have developed an algorithm called the TET Captor Report, as you guys can see right here. The TET Captor Report outputs the direction of the instruments, the bias for the instruments from an investor horizon perspective, from a swing horizon perspective, and from a day trading horizon perspective. So basically, I look at these different horizons and see if the market supports my theory. If it does, it does. If it doesn't, I avoid it. As simple as that. Now let's start with AUD JPY. What I can see for AUD JPY from a technical perspective, let's full screen this shit. I can see that the market has been over expanding through to the upside right here. I can then see that the market created tops, 1, 2, liquidated these tops through to the upside, and then started melting down with momentum through to the downside. It looks like AUD JPY from a technical perspective wants to fill up this gap and then possibly continue going all the way down into these bottoms. Now, this is the technical perspective. I agree with it. Market expanding, reversing in the opposite direction, all good. All right. Now, I disagree with that trade from a fundamental perspective. Why? So, why do my AUD JPY fundamentals oppose my sell? Let's start with the Australian dollar. Australia, guys, exports a lot of metals, all right, including gold. And gold right now is at all-time highs. It is the highest it has ever been. Therefore, Australia right now is banking. It's making a lot of money selling gold to the outside. Do I want to sell the currency of a country that is making a lot of money right now? No, I don't want to do that. So that's for the Australian dollar part. Now, for the Japanese yen part, since we're talking about AUD JPY, Japan's prime minister right now, I think his name is Ishiba something, he just decided to resign. He said, fuck this shit, I don't want to do it anymore, and he resigned. Any country with governmental instability is looked at by investors as an unstable country, and therefore they refrain from investing large sums of money in that country. And therefore this is bad news for the Japanese yen. So for AUD JPY, we have good news for the Australian dollar, and we have bad news for the Japanese yen. Therefore, do I want to be selling such instrument? Of course not. Everything about AUD JPY says that AUD JPY is going to be bullish. The probability of AUD JPY going down right now fundamentally is 0 point something percent. And therefore, do I want to be on that sell? No, I don't want to be. I don't believe that AUD JPY is going to go down, at the very least from a fundamental perspective. I don't think it makes sense, and I believe that AUD JPY is going to be pushing through to the upside, continuing to push through to the upside. Let's see how that goes. Now we go towards EuroCAD. Now EuroCAD, I am taking this trade. I already took this trade, and right now the market is running in a bit of a loss here. So why did I take this trade? Let's look at the technical and fundamental and algorithmic perspective. Let's look at everything. From a technical perspective right here, what I can see is I can see that the market has been expanding through to the upside right there. As you guys can see, we have finally reached up into the 1.62500 psychological level right there and taken it out. And the market right here, after taking taking out these highs 1 and 2, is reversing in the opposite direction with momentum, and therefore from a technical perspective, after this expansion through to the upside, I can see the market at the very least on EuroCAD retraced through to the downside from a technical perspective. Now, the fundamental perspective supports my trade in that case. Why? So why do my EuroCAD fundamentals actually support my EuroCAD sell? Here's the thing, guys. For France right now, which is the second largest economy that uses the euro at the moment, its prime minister has also just resigned. So basically, he brought a plan to the government. He said, okay, guys, we're in a lot of debt and we're spending a lot more than we're making, and I'm going to create a plan. So the president asked him, he said, why don't you create a plan that basically can make us more money than we are spending? He created that plan and he went to the government and he presented it. He was like, that's my plan. And the government was like, fuck that plan, that's a shit plan. And therefore the prime minister as a result resigned, which is bad news for France and bad news for Europe in general, since, as I said, France is the second largest economy right now that uses the euro, I believe, after Germany. And therefore this is bad news for the euro. So number one, we have a little bit of bad news for the euro. That's number one. Now we talk about the Canadian dollar part. Listen, guys. For Canada, I analyzed it from an export perspective. Canada is a major producer of oil. All right. And OPEC on Sunday, they had a meeting and they decided to increase oil production by 137,000 barrels per day. Now, just for things to make sense for you, usually when we create more of something, it reduces its price, right? Because there's a lot of it and therefore its price gets reduced. However, in that specific case, investors were expecting that OPEC is going to raise oil production by 200 to 300,000 barrels per day. That's how much they estimated or expected OPEC to raise it. And therefore, you can see that oil for the past week has melted down tremendously because investors were pricing in their expectations that OPEC is going to raise oil output by 200 to 300,000 barrels per day. Now, instead, when OPEC did that meeting, they said, we don't want to raise it by 300,000 barrels per day. Instead, we're going to do more of a modest increase. We're only going to raise it by 137,000 barrels per day. And therefore, investors realized at the moment that they overreacted, that they oversold oil through to the downside in that case because they expected a 300,000 barrels increase and instead we got a 137,000 barrel increase. And therefore, right now, they're fixing that overselling part of oil and they're buying a little bit of oil through to the upside. And therefore, I believe that oil right now, at the very least for the next few days, will rebound through to the upside right now. Now, since Canada exports a lot of oil and is a major producer of oil, I believe that Canada is going to be making a lot more money in the upcoming days since it is a major producer of oil, or at the very least, oil prices going up is good news for Canada since it's a major producer of oil. Therefore, I believe that Canada is the strength of the currency of the Canadian dollar is going to go up. So you have EuroCAD, you have the euro basically weakening as a result of the prime minister resignation, and you have the Canadian dollar gaining strength as a result of oil prices going up, which is great. And therefore, you have a bearish EuroCAD at the moment, which is why I have decided to sell EuroCAD through to the downside. Now, I just want to make one more point about the Canadian dollar. Now, I don't believe that oil is going to be heavily bullish. Yes, investors oversold it and as a result it's going to rebound a little bit. However, I don't believe that, okay, this will turn oil bullish at the moment unless something else happens. But for now, with the news that we have at this point where I'm speaking to you, I don't believe that oil is going to be heavily bullish. And therefore, it's a little bit of a rebound through to the upside. And therefore, if it wasn't for the euro, I wouldn't sell EuroCAD. However, I know that we have a weakening euro and we have a little bit of a strengthening Canadian dollar at the very least momentarily. And therefore, I am bearish on that specific instrument. But it's more so that I'm focused on the euro a lot more than the Canadian dollar. I'm just aware that the Canadian dollar might gain a little bit of strength because of that rebound. However, I'm mainly focused on the euro weakening. The third instrument right here that I am selling is Euro GBP. I already entered this trade through to the downside. From a technical perspective, it's very easy. Right here, the market took out these highs 1, 2, and 3. The market went up into this psychological level, as you guys can see, the 0.87 psychological level right here. Took it out and then started moving down with momentum. I believe Euro GBP from a technical perspective is eyeing these bottoms down there, and therefore I'm targeting these bottoms through to the downside for Euro GBP. Now, from a fundamental perspective, why do my Euro GBP fundamentals actually support my sell? Now, I already told you guys that I am bearish on the Euro because of the Prime Minister resigning basically, and therefore that's what I'm focused on at the moment. So Euro is losing strength at the moment, so that's good for that sell on Euro GBP. Now, on the other hand, we have the British pound, of course. Now, the British pound is not doing so well at the moment because the British government is not doing so well at the moment because of all the debt that they have. And right now they're in the process of, I believe, maybe up until next month, they're going to create a plan on how to deal with that debt and all that. And therefore, for now, the British pound is not doing that well. However, the most recent news for the British pound was that retail sales increased by 0.6%. So retail sales is basically how much people spend money. And the more people spend money, the better it is for the British currency, in order just to summarize things. And therefore, right now, the expectations, so the economists, they expected that retail sales will only rise by 0.2%. And instead, we got 0.6% as an increase in retail sales, which is great and is good news for the British pound. However, I don't believe that also the same thing with oil. I don't believe that the British pound just turned bullish and I'm going to go ahead and start buying the British pound everywhere. No, because it's just a momentary thing. I believe retail sales rise more than expected. First of all, I believe we have the Women Euro 2025 and therefore lots of shopping is happening. And also we have the weather basically is warmer than expected for Britain, and therefore there's a lot of shopping going on as well. And therefore I just believe it's momentary, temporary strength as well for the British pound. But anyway, we have a weakening euro and we have a momentary strengthening British pound right now due to those higher than expected retail sales, which is good for the British economy and therefore good for the British pound as a whole. However, so we see a bullish euro and we see a bearish euro and we see a bullish pound at the moment, and therefore Euro GBP is expected to go down as an instrument, and therefore that justifies my sell for Euro GBP. Let's see how that instrument goes as well. Finally, we have AUD NZD right there, which basically is AUD NZD sells through to the downside. Let's quickly look at it. AUD NZD has created all of these stop losses through to the downside right here, has been over expanding through to the upside. We created these bottoms, lots of stop losses below them, bottoms, stop losses below them. We created this trend line, 1, 2, 3 touches, 4 touches, stop losses below here. Basically, we have a lot of stop losses through to the downside. Market was over expanding through to the upside. We finally went into the 1.11500 psychological level, took it out, and then it started moving through to the downside. I do believe that AUD NZD from a technical perspective can make it all the way down into these bottoms, into this 1.10500 psychological level. From a technical perspective, this makes sense. This is a higher probability trade. It's going to make it down into these bottoms. Now, unfortunately, from a fundamental perspective, as discussed previously for the Australian dollar, I disagree with that trade. Why? Because Australia is making a lot of money due to its gold exports right now, and therefore I don't want to sell the currency of a country that is making a lot of money at the moment. Australia right now making a lot of money, it's bad to sell its currency, and therefore I'm not going to do that, and I'm going to be staying away from that trade. So basically I've had 4 trades today: AUD NZD, AUD JPY, Euro GBP, and Euro CAD. The AUD NZD and AUD JPY ones, I'm going to be avoiding them, and the Euro GBP and Euro CAD ones, I'm going to be taking them. And therefore that's it for today. Let's see what will happen with all of these instruments, discuss it, and then see if we can learn anything in addition to what we've already discussed. I'll talk to you guys soon. So we've avoided this AUD JPY trade successfully because the market would have went to our stop loss right here. This is the benefit, guys, and this is what I want to teach you. The benefit of having a fundamental theory and not just taking any trade that you see. Fundamentals can serve as a filter for you to decide what trades to take and what trades to not take. And in that case, we decided to avoid this trade, which was successful. For EuroCAD and EuroGBP, you can see that those trades are still running in my direction right here. I closed both of them, and I'm going to explain to you why I closed both of them. However, first, let's go ahead and look at AUD NZD as well. AUD NZD is still stuck wherever we left it right there. We decided to avoid this trade, to avoid this sell, because we are bullish on the Australian dollar, and it's still stuck wherever we left it. Anyway, it's not important. Let's move on to the Euro GBP and EuroCAD trades. You can see that EuroCAD, immediately we took it right here and we closed it right there. We can go to the history. Right here is the trades that were closed this morning, and I'll explain to you why did I close them. You can see Euro GBP right there. This trade was taken right here and then it closed right there as the market ran in my direction. Now let me quickly explain why did I end up closing these trades. So why did I close my Euro GBP and EuroCAD trades earlier than expected? Guys, there's a new news today, all right? And I'm always updating myself about the markets. The French president just hired a new prime minister in France. Listen, guys, when someone is fired, that's bad news for the government, because investors don't know how long will that government stay unstable. So that's bad news for the government. However, when the president or when immediate hiring happens, investors feel safer. They feel as if, okay, they brought in a guy and that guy couldn't do his job properly. So they were like, okay, fuck off. And they brought another one to do the job. So those guys, this French government, they are very efficient and they are actually trying to solve the problem. They immediately let go of someone and hire someone else in order to solve the problem. That exuberates basically positive sentiment towards the French government, and therefore positive sentiment towards the euro as a currency. And therefore today I look at the euro as positive. So if the French president didn't hire another prime minister that fast, then I would have stayed bearish on the instrument and I would have continued to sell it. However, since updates in the markets happen, I basically react to those updates. And this is a mistake that the majority of traders do, which is they take a trade and they want to get a 1 to 3, 1 to 4, 1 to 5, 1 to 7 risk to reward ratio. And they continue holding that trade regardless of what happens in the market. What I do is I always verify whether the initial market conditions that caused me to enter that trade, whether they are still of importance. So whether those market conditions still continue or whether they ended and were replaced by other market conditions. For example, if I buy oil because a war is happening between two countries, let's say, and from a technical and setup perspective, I have this setup. And let's say I'm targeting a 1 to 10 risk to reward ratio. For some reason, I would never do that. But let's say for some reason I'm doing that. And the market is running in my direction. Maybe those two countries, as the market is running in my direction for that long of a period of time, maybe those two countries make peace. Maybe they're like, we don't want to fight anymore, and they make peace. As a result, since this war ended between those two oil countries, oil prices are then going to go down again. And therefore, I have to be aware on what is happening in the market, what kind of market condition shift is happening in order for me to react to it. And therefore, that's just some advice that I wanted to give you guys as well. Now, on the other hand, we have the interest rate in Europe today being announced for the euro. The ECB is going to announce it. And therefore, I'm just going to keep an eye on it. I'm going to sit on the sidelines and keep an eye on the interest rate and see what that interest rate would be, if it's higher than expected, lower than expected, if it's as expected. And then I'm going to react to it accordingly. So right now, I'm just sitting on the sidelines, waiting for the ECB to announce their interest rate for me to see how I'm going to react. So there's two reasons. First of all, the problem that initially made me enter these trades is solved. And therefore, there is no reason for me to be in these trades anymore. That's number one. Number two, we have really important high impact news today, which is the interest rate. I'm going to check on these news, see what happens with them, and then study their impact on the markets and then reposition myself in the markets. So those two things basically led me to close my EuroGBP and EuroCAD trades earlier than expected. That's it for today's video. Basically, the lesson today is to basically keep an eye on market conditions, and if you have to close the trade earlier because market conditions shifted, this is what you need to do. Don't be arrogant, don't be stubborn. Basically, you take a trade and you're like, okay, I'm going to ride it out to 1 to 10 regardless of what happens in the world. No, always check for an MCS, a market condition shift, and if an MCS doesn't happen, then you continue holding your trade. If an MCS happens, then you close your trade or you pivot accordingly. So that's the lesson for today, basically, and I'll talk to you guys again soon.